Hello, this is Mark from TradeInformed.com. Welcome to the second part of this video on backtesting a MACD trading strategy using Excel. So the spreadsheet we've got on screen comes from the first part of this video, and we've calculated that the MACD trading strategy would increase our capital from $1,000 to just short of $17,000. But we might want to compare this trading strategy to other trading strategies to see how effective it is and to see how easy it is to trade. I'm going to do this by inserting a couple of new columns. First of these I'm just going to call trades. The second of these will be our drawdown. Scroll all the way back up to the top here. And the trades is simply whether or not there was a positive or negative trade in that particular week. We do this saying capital account of that week minus capital account of the previous week. And we can drag this down and then double click on the bottom right hand corner. Drawdown we calculate using the formula of this week divided by the highest value in the previous weeks, and I'm going to use F4 to lock the first cell, and I'll make the whole formula 1 minus, expressed as a percentage, and then double click on the bottom right hand corner to copy it down to all the cells below. Scroll down to the beginning again, and I've got the metrics here that I'm going to use. I'll stick them in here. Total gross wins to start with. We're going to use the formula equals sum if, and the range of course will be the range of all our trades, and we're going to use F4 to lock this range, and the criteria is going to be greater than 0. So these are all our positive winning trades. So now we can use this, we can just copy this down here, and the sum of our losses, just going to use the criteria, the same range. This is going to be trades less than 0. The profit factor we calculate using the absolute value of the gross wins divided by the gross losses. So we've got a pretty healthy profit factor of 1.79. Our total net profit, we use the formula equals sum of these two. We can see there our total net profit is exactly the same as our capital at the end subtracted by our capital at the beginning. Now we can just reuse these formulas here but change them slightly. The number of winning trades, instead of sum if, we use the formula count if. So count if all the trades greater than 0, and count if all the trades less than 0, and from this we can calculate percentage of profitable trades with the winning trades divided by the sum of the winning and losing trades. 51% of profitable trades in this strategy. Now our largest profitable trade, we've already seen this formula, we use the same range, exactly the same range, but we use the max formula, returns the largest value, and we don't need this criteria here. For the largest losing trade, we use the corresponding formula, which is min, the smallest. Use the wrong way around. max and min. The number of years trading, I know that it's pretty much 62.5 years worth of trading from our first trade to the end of the backtest, and we can use this information to calculate our percentage profit per annum, and we do this by using the compound interest formula, which is the final capital divided by the starting capital, using brackets. And then we're going to put this to the power of 1 divided by the number of years trading. And then we're going to put this all in brackets, subtract 1. So our percentage profit per annum is a respectable 4.63%. And then the last one we want to know is, what is our largest drawdown? Drawdowns can be very difficult psychologically to take, and people in general have a tendency to give up on trading strategies when they see their capital account draw down by a large amount. So we calculate this by looking at our max. Let's copy the range down again. And we're going to look at our max here. I'm just going to cheat. We're dragging this across to this column, the drawdown column next to it. Express this as a percentage. See, our largest drawdown is 23% over this time period. You just want to focus on one of these metrics here. Percentage profit per annum. If you looked at the previous video when we looked at the percentage profit per annum of the buy and hold strategy for the S&P 500 over the same time period, we saw that it was somewhere over 7%. So we can see that this trading strategy does not return as much per annum as just buying and holding the index would have done. However, we do have quite a few variables we can tweak to test different criteria, and one of these, if we have a look at the profitable trade, we're risking 5% loss per trade. If we wanted to increase this to 10%, we can see our percentage profit per annum increases to just short of 8%, and if we wanted to increase this a bit further to say 15% risk per trade, you can see we go percentage profit per annum over 10%. Equally, we can see the other factors are affected. Our profit factor is lower and our largest drawdown is also lower. I hope you found this video useful in showing how we can build a backtest for a trading strategy, in this case over the long term. For more trading information and information about backtesting trading strategies, please go to www.tradinformed.com.